Yo, what's up, family? We are back again with another beautiful banger for you, my people, for you, my friends. As today it is 15th of March. Actually, it is a midnight as I'm recording this content for you guys. Okay, today I'm gonna break down some of the trades that I've been able to take during this week. I cannot break down all of them because they are kind of like many, so I just decided to choose some of them and then to come to break down for you today. As you know, I'm a scalper. I'm a 1-to-1 ratio risk to reward trader, sometimes 1 ratio to risk to reward trader. I don't waste time in the market, and what I teach is what I do always. So, and market is repetitive. It keeps on doing the same thing each and every day. So when you listen on me and you get this knowledge and you keep into practice, I'm going to assure you that you're going to be very, very successful traders as I do. So let's get started. Okay, if you're new to the channel, I would like to ask you to go and subscribe. And you can also share to your people, to your friends. As you know, knowledge is power, knowledge is money. So people looking for knowledge. Wherever is knowledge, money follows. You know that, guy. So I would like to ask you can just take this 1-2 seconds and then click that subscribe button for us. It's the support you show to me, is I'll keep on showing up to these videos. Okay, I'm a Samuel Jumandosi, a professional forex trader from at Forex Trading Institute. Actually, I'm a co-founder of this institute. Let's go straight. Let's go and break down these trades that I've been able to take during this week. As we are now in the EURUSD chart, 1 minute time frame. We use to analyze on 1 minute time frame and a 5 minute time frame, and sometimes we look on the candlestick formation in 15-minute time frame. Those are the 3 time frames that we focus on. As you see right now, we are in the trading range. We are in this trading range. Okay, let me demonstrate it very, very quickly. We are in this trading range. That was the high. And actually this is just a range. So whenever markets break from this point, it shows that it's either markets just go higher or we go low. So we are looking for entries during this range. Okay, as we see here, market came up to this point and created this high. As you see from this point, markets came down, pushed down, then created this high, low, then went up high, another high, low, and then created up another high, then it just came down to create another high, low. So this is the trading range that we have. We are trading within these 2 price ranges. It means we have high that have never been reached, and we have low that have never been broken from that point. So as you see, markets come and then created another lower low, and then just went up to create this high, and then just created this another low, which took the previous low. So makes that if markets come and take out this high, it means this is going to be a very, very strong demand zone. Why? Because it took previous low and then it's managed to break the previous candle. It's managed to break the previous high. So if market and we see market just came down and take out this low and then managed to break another low, it means that this is a very strong bullish momentum. So if the markets could come to this point, it means we could be able to get bullish entries to up to clear this high. I think you know that about that. Okay, so you can just wait for the markets to reach to come at this point. At this point, if you are aggressive trader, as I do too, and also apart from this, you can also wait for any kind of correction, but look for a candlestick confirmation, so for you to enter into that trade. Most of the time markets cannot just give you like retracement up to this level. No, it's not all the time. Sometimes it's just retrace a little bit and then just keep going up. As you know, as you see right here, market did not come up to this discount level here. It didn't come at this level, so it just little pullback, then just kept going up. So what we saw here, and then it confirmed us like to enter into this trade without waiting for the trade to come this level. We saw markets came down, and then another bullish candlestick just went up with very momentum. As you see, market candlestick has got this weak, which means the sign of rejection, right? Which, okay, let me just use it, the sign of rejection. So it means that there was buyers but were rejected at this point. It means they came down, but it's just closed with engulfing candlestick, which engulfed this previous candlestick. And then another candlestick just went up and then cleared this high, but just sellers entered this point and then came down and just closed like an indecision candle. Then that means like was like balance between buyers and sellers. And then another candlestick just came in, something like a hermit, which also shows like indecision. And then another candlestick just came down, another candlestick came and then tried like going down, but it ended closing in a bullish momentum. So at this point I saw, yeah, if this candlestick just came down but it didn't clear this low but ended and closing bullish, it means that this is a bullish significance. It's a bullish signal for me, so it makes me to enter into this candlestick formation. And then I entered quickly into this trade, and it was like 1 to 3 minutes trades or like 4 minutes trade, and I managed to risk one. I entered into this trade, into this at the end of this, and then I risked 1%. It means this low, and I targeted 2%. So it was clear like that. Let's go to the trade number 2. I later on see the market was like created this high, which took this high, and then markets came down and do this correction inside this range, came down and do this correction inside this entire range. So I saw that this is opportunity for us to go short. So what I was looking at this point again, it is to look for candlestick confirmation, like rejection candlesticks, like rejection candlestick are the candlesticks which when you see it means sellers were trying to enter into the market, but there are some buyers at certain points. It means this, you can see it's a demand zone. So this demand zone was trying like to prevent sellers who were selling at this point here. So it means buyers who were holding this, who encountered this movement. It means they wanted to hold their position at this point, so that for market to not go below this point. But sellers were too strong at this point, which make this market go down. So after seeing this rejection candlestick, and then this candlestick just go above and it came down closing like in decision 2, it means like sellers and buyers were like in the middle. And then this is was a signal for me, like, because this candlestick just came down and took out this liquidity, and then this candlestick too went up, cleared this previous candlestick liquidity. So I was waiting for another candlestick that will open with the body that will cover, and will be like engulfing candlestick that will cover this body. So as we see the markets later on come, and this candle closed bearish, so I enter at this candlestick formation. So I targeted I risked 1%, and I was targeting my stop loss was around this point, because market this was strong, because this high, it means took this previous liquidity. So it means this high was responsible for this bearish movement. So it's why I put it in my stop loss at this level. And then I targeted 1:2. My take profit was around this price here. So let's go to the entry number 3. Markets went up and then went down, clear this lower, higher low. So it means at this point I knew that market is going down. That's it. because it went up and then it went down to clear this lower low, high low. So, and then this correction and this pullback was inside the range of this previous retracement, previous correction that will happen previous. So at this point, and then after seeing this bullish harami at this pullback, and then market took this previous inducement, and then market and later on come and close below this harami, and then I entered during the formation of this momentum candlestick that were forming during this movement. Market took this inducement. Okay, first of all, market go up and went down to clear this high low. It means that market has changed the behavior, has shifted the direction of going up and then going down. That's the first thing. Second criteria, market came up, pull back to clear this inducement. Third, market closed below this harami, and then I entered during the formation of this candlestick. So I placed my stop loss above this harami candlestick, this high, this lower high, and then I targeted 1:2. As you see, it was very, very easy, very, very straightforward trade. As you see, market was in down movement, was in bearish, like creating lower low, then creating lower high, then inside the range lower lows and lower high. And then I found myself that this bullish momentum just cleared out all these liquidities. This, as I used to say, I used to teach you guys, liquidity lies also in lower highs and lower lows. So when you see the movement come and then clear out all the liquidities, all the lows, and then just went down to clear its own supportive low, it means that market has shifted the direction, and this low is lower high is a very strong lower high. So it means to us, this is our supportive zone. It's a very strong zone for us, this. So it means whenever trade comes to this point, we'll be looking for confirmation to go, keep on going short. So after seeing this, then markets come and created this harami, and then markets, like in decision candles, you can see the bodies were like similar. It means like buyers were trying to go in, but were rejected by sellers, and then this candlestick closed with this like pin bar on top of it. And then after I saw this, and after seeing this, and I just put this as my support, as my range. So whenever I was looking for markets to break outside of this range, and then after this candlestick formed, and then I entered during this formation. Why? Because markets have already break that range. So I was very confident to enter into this trade too. Then what I targeted 1:2 as always. Okay, when you see this kind of like market created high, then high low, then created high, and then there are some liquidities, this pullback, and then market came later on after some time, after some minutes, and then came down to clear out this. Let me demonstrate it so that you can understand it very well. And then market came and clear out. Let me just put it white so that you can all see. And then market came and clear out this as a liquidity so that it fuels itself more for the upside movements. That was also a confirmation. That was a very big confirmation. And then market, after seeing this candlestick, decision candlestick after this, and then another decision candlestick, and then I see the great momentum candlestick, bullish momentum candlestick, that was going to clear out this highs of this candlestick. It's when I entered this. It was a very, very fast trade, so that I entered below for it breaking that high. So at this point I managed to risk 1% into that, and then my stop loss below this low. This low is a strong low because it took the previous liquidity, and then I targeted 1:2. So that's all, guys. It's very, very simple, as we used to say, I used to teach you this every day. So and there are some couple of the trades that you can see here. I've been able to take them, but I decided to choose some of them to break down for you. You're welcome to Art Forex Trading Institute. You can reach me through my numbers and through Instagram and even a WhatsApp number if you need some classes. Some private classes, private lessons are also available, so you can check us for more. And thank you for watching this video. I would like to appreciate you for your time. See you next time. One love.